Hi, my name is Edward Keller, and today I'm going to be talking about how the banking industry has changed in the years since the financial crisis. Now, the field that I would eventually like to go into is that of the financial analyst. Financial analysts are traditionally people who help companies invest in stocks, bonds, or other financial assets so that they'll be able to fund their business in the coming years. Now, most people at some point or another come in contact with a financial analyst, whether having their retirement accounts handled, or looking at maybe real estate opportunities, or in general doing with financial assets. Now, the Bureau of Labor Statistics expects this job area to have a growth of about 16% between the years 2012 and 2022. Now, the industry has gone through a lot in recent years, though. Even though this particular job area looks to have strong growth, a lot of other areas are going to be facing a lot of trouble in coming years. All this started during the 2008 financial crisis. After hitting a high of around 14,000 in 2007, the Dow Jones Industrial Average, which is the main index that people look at for stock health, plummeted all the way down to 6,600 over the next 2 years or so. After the economic collapse in the U.S. in 2007 to 2009, the U.S. experienced far-reaching effects. Now, people across the country started defaulting on their mortgages and having their houses foreclosed, along with many people losing their jobs. Many people also saw their retirement accounts start to disappear once the stock market started to fall. In 2009, financial analysts also were being laid off in very large numbers. Since 2009, though, the market has made a remarkable comeback. In the past 5 years, the Dow is up from its bottom in 2009 all the way up to about 17,000 in the past month or so. Here's a chart of the Dow Jones Industrial Average between the years 2009 to 2013. Obviously, there is very strong growth. Now, many people have still had trouble finding jobs, though, since the economy as a whole has not had the recovery that many people expected. Now, once the financial crisis finally ended, the first thing a lot of people started wondering was, how did the system get this bad? Since then, there's been a constant struggle between Congress and the banking industry on how exactly would be the best way to regulate the industry. Congress wants more regulation, and the banking industry wants less regulation. A regulation that Congress has passed aimed at Wall Street in the recent years has a far-reaching effect outside of the industry, considering that in the U.S., money from Wall Street flows to every single industry in the country, whether it be engineering all the way to the equine industry. Now, banks have had a marked shift in focus over recent years. Even though there has been a fair amount of new regulation aimed at curbing risk, a lot of banks have taken it on their own to start averting their money to less risky ventures, and the banks are experiencing record profit margins in recent years. And one of the main divisions that a lot of banks are putting a lot of their resources into now is the asset management industry. Now, banks have been looking to move away from more risky assets for a while, and asset management appears to be one of the best spots that they feel to put their money in. The asset management division is mostly made up of financial analysts who will pick stocks and bonds while trying to safely grow their clients' wealth. Much of the money that flows into the asset management industry comes from pension funds and endowments, as well as individuals who want their personal wealth handled and invested, mainly because they don't really have the time to. Now, pension funds from many different companies are managed by these banks, which is one of the reasons why it's worth always keeping an eye on the stock market, even if you don't pay very close attention. Now, Wells Fargo, JP Morgan, and Goldman Sachs, some of the largest banks in the country, have all made a concerted effort to grow their asset management division. Many financial analysts are also being recruited to this division. Now, in closing, financial analysts in the banking industry as a whole are in the midst of a large amount of change. This change will have an effect not only on the financial industry, but on every industry across the U.S. in the coming years as people continue to search for jobs. Thank you.